Now, the Top 100 Mid-Sized Companies Survey is an initiative between the Nation Media Group's Business Daily newspaper and KPMG. With me this afternoon is Richard Etemesi. He is the CEO of Standard Chartered Bank. Beside him is Mr. Peter Mwangi, the CEO of the Nairobi Stock Exchange. On his right, is the Nation Media Group's CEO, Mr. Linus Gitahi. Beside him is Mr. Joseph Mwara, the CEO of KPMG. Beside him is Mr. Stephen Cohen, the CEO of Sage Pastel. And to my immediate left is Dr. Katwalo Mulengani, the Director of the Institute for Strategy and Competitiveness from the Strathmore Business School. Gentlemen, welcome to you all. Now, the aim of the Top 100 Mid-Sized Companies Survey is, of course, to identify, recognize and honor the fastest growing mid-sized companies in the country. Now, I'd like to start with 2 points. And one of them is a fact that the SME sector accounts for over 80% of employment opportunities in the country. In addition to that, small businesses contribute to 20% of the country's gross domestic product. Now, given that, and given the fact that there are now more opportunities with the opening of the borders to the East African community, how best can the government ensure that SMEs now take advantage of these opportunities, and in particular, the common market? I'll start with you, Dr. Mulengani.
Thank you very much. I think there are 2 key areas where the government can definitely do a lot. The first of that is in terms of ownership. I think this whole exercise is not necessarily a government-owned, or should not necessarily be a government-owned exercise, and I think there should be a lot of effort towards encouraging participation and ownership of this whole exercise of integration for the SME sector. The second issue is the question of information. I think by and large there is still glaring information gaps. I mean, a couple of weeks ago I met some managers from this sector, and I raised a very simplistic question. I raised the colors of the East African flag and asked the question, what do these colors mean to any of you? And out of a group of about 25, probably only about 3 knew what these colors were. So for me, it's also a question of information.
Well, I'll take that question then to Mr. Linus Gitahi, the CEO of Nation Media Group. On the issue of information, do SMEs have access to enough information, whatever it may be, to move them forward?
First of all, thank you very much for that. Probably the answer is not as much as I'm sure they would like, but I also think that goes to the heart of why we are here this afternoon. It goes to the heart of why we gather together to support the Top 100, because before this meeting, we have had extensive work with Cenovate. They've done a lot of research. There's a lot of information that we've been able to generate that we'll be sharing with them, and that we can also go to the website and access. But also probably at the macro level, we have an opportunity, even by gathering these groups together, to share experiences, to share different information, to share some of the challenges that they face in the business. And what we do is to provide that forum. And it is not just a one-off thing that we do annually. In between, we do organize meetings where they can get the opportunity of, again, sharing even more information. But the whole area of information is one that all of us would like to do more, so that you can make the right decisions across East Africa as the business opportunities evolve.
Okay, now we do have a few questions from the audience, so thank you to our audience for participating. Let me turn to Nicholas Makosi, a consultant from Legrand Consultants Limited. Now, of course, SMEs are continuing and striving to grow, but his question states, it's a rising concern that management of SMEs is becoming a challenge as they grow. And his question is, how can we assist them to appreciate professional consultancy in this area? I'd like to direct that question to Mr. Joseph Mwara.
Thank you very much, Smirti. Yes, from the work that we have done, as you have been told, the survey of Top 100 is informed by very detailed information that is carried out on behalf of Nation Media Group and KPMG by Synovate. And one of the findings from there was that the owners of the business spend about 92% of the businesses, owners of those businesses spend time managing those organizations. So there's need to begin to professionalize those businesses. We have seen signs that some of them are introducing more professional management practices like strategic planning, like stakeholder assessment. And really what the question here is, can they benefit perhaps more by investing in professional services? And the answer is yes. There's a lot of value that can be delivered by professional service providers like KPMG. This is not a sales pitch. It's just to demonstrate that businesses that engage with us end up getting value. So that if you are, for example, looking at performance improvement, if you're looking at strategy development, if you're looking at the whole area of human resource management, recruiting, if you're looking at risk assessment, if you're looking at market expansion and due diligence, there's some value that you can invest in, and you will be able to grow a lot more, because what we have seen from these organizations, many of them are still between 100 million and 300 million, and from the analysis, there's still expansion capacity using the already established capacity. So there's a lot of scope for growth. There's a lot of scope for mining more value from the existing investment, and certainly investing in professional services can help you to get more value out of your investment.
Now, according to the findings, 62% of the companies face challenges when it comes to working capital. Mr. Etemesi, now a question here is this the reason that banks are only interested in treasury and other money market products?
I think the answer to that question is no. I think the challenges that most SMEs will face are twofold. One is access to the right type of credit and at the right price. Let me start with the first one. A lot of SMEs are family-owned enterprises. The way they've been set up is using the sponsors' funds or borrowings from within the family, and then they continue to grow. And when they start, they get to a certain level, they need access to long-term capital. Now, the way the financial sector is structured in Kenya, what they can access is short-term capital. Short-term capital is expensive, and long-term capital, where it's available, has very onerous and very time-consuming constraints. And that's one of the challenges that we've been working with through through the financial sector, to try and say, how do we unlock the potential of SMEs by providing them long-term credit? The second one is appropriate long-term credit, because bank borrowing is but one alternative. There's access through the stock exchange, and various instruments from the stock exchange, which can also go supplement the borrowings from financial institutions. The SME challenge, therefore, is to find out where is the correct balance between short-term working capital, long-term funding for growth, and then equity in terms of balancing those. And I think that is where financial institutions need to come in, together with other professional organizations, to advise the SMEs on the correct capital structure that will enable their various businesses to grow, thrive, and to prosper.
You mentioned how you are looking into how to achieve long-term capital for SMEs. So what are some of the solutions that have been found so far?
The best one that has happened so far is the government's initiative to float long-term bonds, because the challenge that banks have is you get short-term funding, which is typically your current accounts and your savings accounts, which are almost instantly callable. The long-term government bonds then give a benchmark for lending long-term, and therefore you are able to go out there and source long-term funding from depositors and then translate that into long-term lending to SMEs and other corporates that want it. So that's one example of how the changes in the financial structure can result in benefits to the SME sector.
Again, with reference to some of the findings, I'd like to direct this question to Stephen Cohen from Sage Pastel. Dr. Badiani from Alpha Medical Manufacturers has said that most companies are using own-generated capital, and the question is it because it's too expensive to borrow from other sources?
Thank you. My opinion is that when you start a business, there's a maturity issue. And the typical position is that you're going to get short-term funding from your family, etc. And I think as a business starts to mature and they start to become aware of what other funding is available, then you will see things change. But I think it requires a lot of reading on their part to understand how the world works, how the market works. But I think the small business owner is so busy trying to sell goods and service customers that they don't really apply themselves to the long-term financial instruments out there, or to even understanding their own cost of capital and their return on equity. So I really think that it's an educational issue which can be solved in a myriad of ways.
And in your view, what can be done to make the cost of borrowing cheaper for these mid-sized companies?
The cost of borrowing, if I was a business, I would obviously try and establish my credibility, because it's a risk. If I'm a risky entity, then my cost of borrowing is going to be high. So I would have to have good financials, good track record, make sure I've got a good auditor, and then if you can lower the risk to whoever is going to lend the funds to you, your cost of borrowing is going to drop. So you've got to run your business maturely is what I'm really saying.
Right, okay. And you talked about credibility. Looking at the findings, Mr. Josephat Mwaura, I will come to you shortly, but looking at the findings, from the research, what has been discovered with regard to credible businesses or lack of credible mid-sized companies?
I would say that from the research over the 3 years that we have now done it in Kenya, we have seen the first year when we opened applications, we received over 500 applications, but only just about 220 of those were able to provide financial information. So there is still a group there, if you just work with that population, of about 300 that need to work on their internal systems, that need to set up financial systems, that need to generate the 3-year financial information that is required to be able to participate in the Top 100 survey. And there are many benefits for that. As we said, for you to be able to access credit, if you've got to the bank with a set of financials over 3 years, already they can see a trend. And many of the 241 companies that participated demonstrated some of the highest standards of credibility. And we believe that by just being members of Top 100, by being able to compile the information that they have been able to put together, they will be able to demonstrate this to a number of other stakeholders, including investors and banks, and they'll realize the benefits that arise from that credibility.
Okay, Mr. Peter Mwangi, the CEO of the Nairobi Stock Exchange. A question here from the audience requests that you kindly clarify the benefits of profit versus negatives. What is the ideal? Profit retention, I think this says.
Thank you, Smriti. I think the question is the relative merits of retaining earnings vis-a-vis paying them out as dividends. And I have to say that all businesses are unique, and every business goes through a cycle as it develops. And depending on where it is along that cycle of maturity, the owners, the directors of the business will have to make a decision. For mid-sized companies such as the ones that participated in this survey, they are still in the growth stage of their development, and it makes sense in that stage to reinvest your earnings because for every shilling that you plow back into the business, you get a better return than you would in any other alternative investment option. But as businesses mature, it becomes then necessary to strike a balance between meeting the growth demands of the business and keeping your investors happy with a dividend payout on a regular basis.
Go ahead.
If I can just add to that, also, it's a free market, so you have certain investors that need income, and they're going to have a look at the dividend yield on the share, and then they will buy that share. There are more risk-inclined investors who want to go for capital growth and don't need a dividend stream from their shares. So I think the business needs to make the right decision for their business. If they need to retain the earnings to invest it in capital equipment, they must do that. But to try and keep the shareholders happy is a difficult one. I would rather attract shareholders who prefer my risk profile. If you don't need income and capital growth, fine, then the dividend policy is not important. If you're elderly people and you need to live off the income, then you're going to go for shares that pay dividends. But I think the business owner must always do what's right for the business.
Okay, on to a very important and valid question from Nitin Mald from Naivas Limited. I direct this to both the CEO of NMG and also Dr. Mulangani. As being part of the initiative of the top 100 mid-sized companies, why the businesses in general, or this forum, and let's point out that the panel itself is male-dominated, what encouragement are we giving women entrepreneurs? And they are equally capable, and we must think to utilize their expertise in this modern era. What's your opinion or advice on this?
First of all, let me say that I'll start the other way around. I am very pleased, and I've been pleased for the last 3 years, to see that actually among the audience, many of the winners of the top 100 initiatives are businesses that are led by women. And therefore, I need absolutely no convincing that women have not just a significant role to play, but actually, in many instances, are actually better than men. And we've seen it in the top 100. As for why we are gathering of men here, it's a slightly different question. Because what we did as Nation Media Group and KPMG is to, and I think all of you saw that, is to look out for sponsors. And we look for sponsors who are going to meet our criteria of the initiative that we are having. I am very pleased that my friend Richard Atemesi came in. I'm very pleased that the CEO of Nairobi Stock Exchange came in. I must say, for Sage, we've been working with a wonderful lady over there called Nikki over the last 3 years. I'm very pleased that Strathmore Business School came in. But it's a valid question that we find ourselves in front here as a gathering of men. It's something that we must ask ourselves in our institutions, and we do ask ourselves that question at Nation Media Group, and we must ask ourselves at Top 100, and I think it should remain on the table until we are all happy with the ratios.
Yes, I think I'm inclined to agree with Linus, because if you look at the audience, certainly I think the participation of women is great. There's definitely no question about that. As far as the panel is concerned, I mean, I don't have much to say, perhaps just to encourage them to come forward and sponsor and be part of this, because there's no door that has been closed. Unless maybe somebody says so.
Can I just add?
Yes.
I think the other thing to recognize is that yes, women are capable, and yes, we have many women who are good in this market, but there are few at the top. And there's a significant competition for good women at every level. I think as men, from my days in high school, I know that. The challenge we have, many of us, is that even when you have actually implemented a strategy where you are developing people, preparing them for leadership, they get to a point where they have to make personal decisions. And they decide, look, what that job requires, or the scope of that work, and the other personal interests that I have, I may not be able to take that position for now, and I choose either to stay at a particular level or move to a different position. So there are many different issues that affect why perhaps we only have this gentleman up here. But I can tell you, many of us are having some sleepless nights trying to answer that question, trying to resolve that issue, because we know we need them in our organizations.
Okay.
Look, sorry, I mean, I think I'm the only person who has really put my money where my mouth is. I think women are so important that I married one.
Is it?
All right. Okay, let's turn our attention now to the Nairobi Stock Exchange. Peter Mwangi. A question here from Priyesh Shah, the CEO of Express Automation. He's asking for advice to consider expansion capital, i.e. venture capital versus stock exchange flotation. Which option unlocks the best advantage for A, shareholders, and B, the business?
Well, I think that that will depend on the particular business. For the typical mid-sized company, a venture capital investor will be looking to put money in the business and probably support it with some strategic input in order to grow that business. So at the point of entry of a venture capital investor, the entrepreneur has no opportunity to cash out, as it were. And typically, the venture capital investor will also be looking forward to a listing as a potential exit for himself. So I think there's a way in which the venture capital investor can come in, work with the entrepreneur to grow the business, and then prepare the company for a listing, at which point both the entrepreneur and the venture capital investors will both benefit. I think the only difference is that for an entrepreneur who wants to cash out of his business, the better option might be to go to a listing rather than to seek a venture capital investor.
Okay, Linus Gitahi, what are some ideas for us who have been selected in the top 100 to leverage this status in growing our business further? This is especially relevant to the first-timers to this club so that they can quickly plan strategies. That's from Nimish Shah, MD of Travel Affairs Limited.
Yeah, first of all, let me welcome the first-timers into the top 100. And let me ask the old-timers of the top 100 to have a conversation with them about the benefits. And I will enumerate a few. First of all, I have seen that I was talking to a few of you who say that since they became top 100, besides the fact that I've been seeing the logos in many of your vans and in some of you the letterheads, there has been some benefits of the fact that, and maybe Richard can also talk about that, even when you go to the bank to look for a loan. Whereas that is not a criteria, the fact that reputable people, reputable organizations like KPMG who do the audit have been going through your books and have rated you as top 100 holds you in very good stead when you start having those conversations with third parties like banks. But besides that, we also have regular meetings. We try to organize one every quarter where we bring ourselves together. Sometimes we get a speaker who can speak on a topical subject. Sometimes it's just ourselves to have conversations about the challenges that we are facing in our businesses and how we are trying to overcome those problems. So those are some of the benefits we have. And then, of course, I hope it is a motivation. If you are number 20 this year in the top 100, I hope there is a motivation to make sure that next year you move to number 10, you become the winner. And if you are number 99, to ensure that you do not fall over, but probably come this week in top 100. But most importantly, we also look forward, and we started that last year. We look forward to seeing some people graduate. Like we are saying, we are very clear about why we do this thing. We are very clear that this is the drivers of not just the businesses, but the economy of Kenya. So we look forward to seeing some of you graduate to Club 101. And Club 101, for the new timers, are the people who turn over more than 1 billion shillings. Now, what happens when you become a member of Club 101 is you become an elder. You become a consultant to the smaller businesses and help them to grow and keep advising them and show that it can be done. So there are immense benefits of being a member, and I look forward to, again, through our interactions, sharing those benefits, and more importantly, making sure that we continue on that path to helping build this economy.
There was a question earlier from the audience regarding the high cost of credit to SMEs and also the super profits being made by banks. What's your comment on that?
I think, Smita, that's the wrong question.
Okay.
I think the right question is twofold. One, access to credit and the constraints that are making it difficult for SMEs to borrow. Because if you compare the cost of credit to profits, it's not exactly true, because banks do not just make money from lending. There's many, many other activities that they do as well. Mind you, I'm not trying to defend banks. But let me just pick up the first one, the cost of credit. The cost of credit is not only a question of the price, because the banks take in deposits, they then add a margin, then there's always the risk, there's the risk factor, that then gives you the absolute cost of the credit, and then there's the whole process of recovery, the judiciary system, and so on. That's also added in there. If you come up at the end of the day with a figure, that's what it's going to cost the bank to give you that credit. On top of that, then you look at the credibility of the counterparty. And we spoke about earlier about your financials, your track record, the management team that you've got, the product or industry that you're in. All these things are taken into account by banks in assessing credit. That have a direct impact on the price of what the person is going to borrow at. If you take the large multinationals, for instance, the large multinationals borrow at below treasury bill rates, or close to treasury bill rates, because of all the factors that I've spoken about are true to those industries. The smaller you are, the less of a track record you've got, the risky you are, the risky your business is, the higher the cost is going to go to you. It's a fact. I think the second point is the cost of collateral, which also adds to the cost of credit. A typical SME, mid-sized company today, if they want to borrow, they have to put up collateral. The collateral is either in the form of property, sometimes landed property, sometimes shares, stocks, personal guarantees, etc. The difficulty we have in Kenya today is in terms of, first of all, assigning that collateral. The process that you've got to go through from the lawyers who will charge you a legal fee, both sides, they'll charge the client, they'll charge the bank, to the registration process, to all the government agencies that are involved in the registration of that collateral. It's a cost. That cost is passed back to the borrower. So we can actually unlock this in two ways. First of all, in the counterparties becoming a lot more credible, and therefore making the bank's assessment of their risk a lot easier and a lot faster. That will reduce the cost. And then finding ways in which we can take alternative forms of collateral other than land and property. We know that in certain countries, equitable mortgages, if you take India, for example, equitable mortgages work fantastically well. They're cheap and they're equally enforceable as land and buildings that we take here in Kenya. So it is not a question about how much the banks make. In other words, if the banks reduce their profits, the credit will become cheaper. It's not. There are other more fundamental issues that need to be addressed in order to make credit more accessible, first of all accessible, and also cost effective to the borrower.
Okay, Mr. Mulangani, now let's look at the education side of things. Would you say that the regional systems of education are supplying the required skills and demands by the market?
Well, as far as education and training is concerned, I think the biggest challenge that we have is there has and probably continues to be a total disconnect between what the market is asking for and what we're providing, primarily because of lack of engagement. For long, we've developed curriculum and so on and so forth without really engaging the market and saying, you know, exactly what do you want. But also beyond that, the market itself is unwilling to play the game. I'll give you an example. At Strathmore Business School, we've got some courses that we're running. And for your information, if you get into the top 100, we do give you a discount. And again, you know, a lot of companies don't want to get engaged. And that is a big issue. Training and development is not seen by and large as a priority area for a lot of companies, particularly at this level. And I think that is a big problem. So it's not simply a question of failure to provide the skills that are needed, but the lack of engagement, you know, to determine the needs in the market, but as also the failure of the market to take up the existing opportunities here.
Okay, let's look at the findings again, Mr. Mara. Now, business sales, according to the findings, their revenues for 2009 increased by 10% compared to 2008. But some sectors did retract, and one of these sectors was the agriculture and horticulture sector. Now, what impact does this have, given the fact that agriculture is, or recently was, named as the backbone sector of this economy?
Right, thank you, Smriti. As I mentioned earlier during the presentation, when you look at the structure of our economy, agriculture is right there next to our natural endowment in terms of our land, when you look at horticulture as well. But when you look at the results for that year, remember the numbers that we are looking at are numbers between 2007 and 2009. So the retraction of agriculture and horticulture within that period, there are a number of factors underlying that. Of course, we know the post-election violence and the effect it had on agriculture. Then we had the drought, and also the effect that had on agriculture. And then to make matters worse, which is, you know, incomprehensible to other people, we had the flooding. So we are complaining when we don't have rain, and we are complaining when we have too much rain. And in both instances, we end up losing crops. So that costed us. And there's a need there to just manage in terms of how do we deal with these eventualities, especially with the increasing issues of climate change. Horticulture in particular was also affected not only by those events, post-election drought and flooding, but also by the global crisis. because most of our horticulture is also for export. And between, especially from September 2008, is when the markets crashed. And therefore, from that time, many organizations have suffered. And really what we need to be looking at is not looking at that so much as a challenge, but then beginning to look at the East African market and the opportunities that it presents, to look at the wider East African market, to look east, to look to India and to China, and to the opportunities that presents. India and China in particular seem to have placed priority on the African market, especially in terms of natural resources and agriculture. So agriculture is not going to go down. Agriculture is going to continue on the up. All we need to do as business people, we need to find more innovative ways of generating that value, of identifying new markets and capturing those markets.
Go ahead.
I was just going to add that I think if we look at agriculture, what we perhaps need to be focusing on is to be able to move up the value curve. If we continue to simply produce and sell as it is, then we're not going to achieve very much. So I think it's a challenge to industry to be able to look at how much value do we add to whatever we're producing. Otherwise, it doesn't make sense for us to produce maize and sell it as it is. Yeah.
Okay, Peter Mwangi, now the companies that feature in the top 100 mid-sized companies survey are not listed on the stock exchange, but what is it that those larger companies that are on the stock exchange need to do in order to support the smaller companies? We're talking about the input the government must have, but what about the larger companies?
Thank you, Smriti. I think the SME sector exists to a large extent to support the large enterprises. Some of the sectors that we saw doing well in the survey, such as services, are providing those services to the bigger corporates in this market. But there is a lot that bigger corporates can do to ensure that they transfer skills to their business partners, they give them an equal opportunity, and they give them the opportunities to provide that and grow their own businesses. They could also provide training to their staff, all to develop the capacity in the local economy to support their own business requirements, but also to create a bigger market for their products.
Okay, a question now from George Murimi from Swivel Marketing. There is an increasing trend of desire to get rich quick within the market, which in turn has an implication of integrity. The question is, why did this not feature as a factor of affecting businesses in Kenya, or is it a salient feature? Stephen Cohen.
Thanks for the question. Look, luckily I've had personal experience with this. We listed our company in the Johannesburg Stock Exchange in '97. And I have to admit that we said all the right things about raising capital, etc., but a big part of why we listed is that we thought we were going to make so much money. And we went into the game, and all of a sudden we realized that we had given lots of employee share options. There were widows who had invested monies in pension funds that had put their money in our business. And we ended up taking our task quite seriously, and I think we matured over time. But I think this was very prevalent in that '97 era, the dot-com boom. And I believe that with the financial crisis and everything that's gone down over the last 12 years, I would imagine that the investor is wiser to this kind of phenomenon. And I would just encourage people who are kind of listing to exit to take things very seriously. I mean, I believe it's quite a moral issue. And I'm hoping that the investment funds, the unit trusts out there, are kind of, they're brave enough and they're intelligent enough to look at who they're investing in. And if you spot that somebody's only listing to exit, you don't go near that company. So I think that people have to suffer if that's going to be their rationale for exiting. Because remember, if you list a company, people are supposed to do research. As you said, what industry, what's management, what's their track record? And when I look back in '97 now, it was so obvious which people really had very little to list and just wanted to exit. So I think the investor also has to take quite a lot of blame for getting involved in that hype.
Okay, Mr. Mark.
I think what Stephen is telling us, there is a right way to become rich quick. But I think the question was addressing more the negative way of becoming rich quick and its impact on integrity. That did come up. There are a number of factors that came up that are affecting businesses. The top one was competition. that the participants in this survey were saying that the biggest challenge they are facing is from competitors. Secondly, is infrastructure, whether you're talking about roads, whether you're talking about the cost of energy, but also corruption did feature. 12% of the participants said that corruption is an issue, and therefore the effect on integrity. So really what we're saying, there's a right way to make money quick, but if you want long-term sustainable growth, if you want to grow a brand, you cannot take a short-term approach. You cannot attempt to make a quick buck. But what we are saying here is that Top 100 have committed. Today we have launched the Integrity Pact, and many of them are saying they're going to sign it, to have committed on their part to demonstrate the highest business standards. But the complaint we are receiving from the participants is that the government institutions that they are dealing with, whether you're talking about the traffic police, whether you're talking about the councils, especially the City Council of Nairobi has been cited here, whether you're talking about a number of government departments that have to deal with them, many of these government departments are outrightly asking for bribes. And really what we are saying is that that needs to be addressed. As these people commit to doing their business right, then the government also needs to really ensure that the anti-corruption strategy is serious. But we are encouraging our participants not to be cowed, and a number of them have said that even when 20 city council people come and camp on your door and say, unless you give us this bribe, we are going to arrest you, they say, go ahead, and they call in their lawyer. So they are calling that bluff, and hopefully we'll be able to improve this standard as we move forward.
All right, let's turn to another question from the audience. Between banks, SACCOs and microfinance lenders, which lending institutions are SMEs opting for and why?
I think most of the SMEs lie in between. The larger SMEs and the mid-sized SMEs would go to banks for the very reasons that have been articulated here, where they're a lot more transparent, they've got a track record, they've got a solid business proposition which is bankable. A lot of the startup SMEs would go to SACCOs, and they would even go to their friends and their family. And so there is a mix. So I see that SMEs transition from SACCOs and other forms of quick borrowing, where you're not required to put onerous amounts of collateral or information, and you transition up the curve until you get to a point where you can actually go and sit in front of a bank manager and ask for a proposition. Linus alluded to it, and I'd just like to emphasize the point that the banks are there to lend. There's a misconception that banks prefer to put their money in treasury bills. Treasury bills is an option or an alternative when you do not have lending opportunities. SMEs that are in the top 100, or they have that mark of being in the top 100, that have gone through the process, will probably find it a lot easier when they take their business to a bank to get it approved and to get it at an attractive interest rate. So I think a lot of SMEs need to learn from this process to say, if I tick all these boxes and then I take my proposition to the bank, chances are I will be able to get affordable credit much, much faster. And therefore, I don't have to rely on these alternative credit sources to fund my business, which could be sometimes very expensive, but also very dangerous. Because we know cases of people who've gone to borrow from other sources who've ended up losing their business because the terms and conditions that they were signing up for turned out to be very different from what they thought. So my encouragement is, as we continue to grow the SME sector, I think the initiative that we've got with the Top 100 is absolutely key, and an example that a lot of SMEs should follow or aspire to make sure that we get to a point where they can also benefit from the financial sector.
Okay. Now, technology is obviously key in enhancing growth opportunities. How well have SMEs adapted to the latest technologies in taking their businesses further, Mr. Cohen?
What we found with the 200,000 businesses that use our software in South Africa from 1990 is that today most SMEs have a PC, personal computer, and I would say 60% of them are using software. And of the 60% that are using accounting software, I would say 20% of them are using it in the right way. Because if we look coming from manual systems, once you computerized and all of a sudden you got these numbers out that balanced, everybody was overjoyed. So they were more into the efficiency of stuff. But in terms of analyzing numbers, to take your business forward, to understand your business, to present information to banks in the right way, I would say that there's really the minority are using financial information in the correct way. And that's kind of what we're trying to push. The agenda that Pastel's trying to push is beyond accounting. We all know the trial balance balances, but use that information intelligently to understand and explain your business to others more efficiently.
Yeah, coming back home, actually, the findings also in Kenya, the participants here is that actually the majority of them are using technology. And many of them are already on fiber, many of them have networks, many of them have got computer systems, and what they are running on those computer systems are largely accounting systems, as well as database management systems. So people here have, these are not small businesses. Remember also, many of these businesses, only about 7% are under 5 years old. The bulk of these businesses are over 10 years old. And if you look at the numbers, they represent between 70 billion and 100 billion in total turnover. So these are not small businesses. And if you look at around here, you probably find a number of people with iPads, and all manner of modern gadgets. So technology is playing a huge part within the top 100.
Okay. Another question from the audience, that's Gitao Mashare, the MD of Lackland Kenya Limited. There's a rapid increase in the trade involving fake, adulterated and counterfeit products in the East African region. How can we reverse this trend or stop it altogether? Mr. Mara, I'll direct that to you again.
I was going to pass the back.
Go ahead.
I can do that. I have seen in the last couple of years, particularly being involved with the Kenya Association of Manufacturers, being involved with the KEPSA, I have seen increasing determination by businesses and the government to tackle the whole issue of fake goods. And I have seen there has been measures that are increasingly become more effective. Last year, we probably had more people aligned in courts more than any other year. The business lobby groups are meeting and pushing that agenda through the Prime Minister Round Table, through the Kenya Association of Manufacturers and KEPSA and other organizations. So my plea to you is that let us get together and continue the pressure, because for me, the ultimate that will eliminate those kind of practices is if we can get as stiff penalties as possible for people who fake or who adulterate our products in any way. Until we get very heavy punishments, then we'll be having a row and then a storm. So we need to keep the pressure, and as Nation Media Group, and I guess all of us are happy to play our role in ensuring that that pressure is sustained with the government to ensure that we take our manufacturing seriously and we take the issue of faking much more seriously.
Yeah. I think just to add on to that, there are three key actors in the whole issue of fake products. There is the consumer, there is the trader, and there is a regulator. There is a regulator who is supposed to be stopping that product from coming into the country in the first place. And that needs to be strengthened. But there are also business people who are in that business of bringing in what they know to be fake products. And then there are consumers who actually don't know how to tell the difference. And there's an education process, and in partnership with the media, you can actually educate people. For example, KEBS have got their quality mark. If you go to a supermarket, I don't know how many people actually look out and decide, does this product have a quality mark on it? And if it doesn't have, then I should not be buying it, because I have no guarantee whatsoever of the quality of that product and even my own safety. And these are some of the issues. I think there's a whole education process, consumer education as well, that is required to make sure that all of us are taking responsibility for not consuming these adulterated products.
Okay. Did you want to add to that,
No,
Mr. Mulinga? Okay. With regards to the Nairobi Stock Exchange, what is your advice, Mr. Mwangi, to these companies that fall in the top 100 mid-sized companies who want to eventually get listed on the Nairobi Stock Exchange?
Well, a lot of the companies in the top 100 already meet the requirements for a listing on the exchange. And my word to them is to encourage them to begin to prepare themselves to start enjoying the advantages of being listed. But as the banks have responded to SMEs, each bank now has a specific offering targeting the SME sector. We in the capital markets are also developing a specific market segment that will target SMEs. The intention is to have a market segment that has less stringent requirements, both for joining and for staying on that segment, so that we can avail our capital markets and the resources that we know are out there with investors and make them available to these companies, because as Richard says, there's a transition as a business grows from SACCOs to banks and eventually to access long-term capital from our capital markets. There are significant advantages, tax advantages, the profile it gives the company, the ability to attract and retain high caliber employees, and so on. And so I would encourage the SMEs to actively consider the option of listing not just equities, they can also come to the market to raise debt by listing bonds.
Okay. Mr. Etemesi, now the Top 100 mid-sized companies survey has been in existence for, this is now the third year. Over the last 3 years, what significant change have you seen with regard to how SMEs are responding to the offers that banks are providing them?
I think straight up, there's been a huge improvement in the quality of information that the SMEs are able to provide the banks. I think there's an acceptance now that the days when you had 3 sets of books, one for yourself, one for the taxman, and one for the banker, are gone. You now need to keep one set of books because it's to your own benefit. There's also an acknowledgement that you need to operate within the sort of the industry or the governance criteria that is relevant to your own industry. Again, it's for your benefit, and you get a chance to shape it. In terms of access to finances, I think it's giving a lot of SMEs the confidence now to be able to go and sit in front of their bank manager and have a conversation. In the not too distant past, SMEs approached banks almost like a sinner approaches a confession, because you know that you've got problems and you're looking for a solution. Right now, I think there's an adult conversation that is taking place between the SMEs and the financial institutions, because the SMEs, I think, have noticed the importance and the important role they play in terms of the business sector and then the whole economy at large. So over the past 3 years, we are seeing the SMEs moving from being sort of in the periphery right to the front and center. And this is something that's to be commended. And I expect that as we continue in the future, we will see SMEs take up the real role that they should be playing in this economy, as they do in other economies around the world.
How would you describe the current working environment in the country that SMEs are facing? Is it as conducive as perhaps they'd hope for it to be?
I think if we talk about the work environment, we're looking at 2 specific areas here. If we look internally, by and large, a lot of SMEs have serious problems in terms of a professional approach towards the management of their staff and so on. There is definitely a huge area there, and there is room for improvement. We certainly hope that as we grow and as we move with these kinds of initiatives, that the industry will come on board and begin to look at this very, very seriously. But also, secondly, in terms of support and encouragement and development from outside, beyond legislation and so on. I said to you earlier that we have a problem of engagement between, for example, higher education institutions and SMEs. And I think this should help to professionalize a lot of the things that they do. And once we've moved beyond that, it will become better, I believe.
Mr. Cohen, in your opinion, which are the sectors that you think will be fastest spreading their wings across the East African region now that we're open to other countries in the region?
Well, I would imagine anybody with a relevant business that can expand. I mean, if you a motor spares company that's importing stuff, and you can expand into those markets, you're going to do well. But if you're addressing a finite geographical area and your product is only specific to that area, then you're probably not going to. So, yeah, I don't live in Kenya, I don't live in East Africa, but I'd imagine anybody who's got a generic business that transports well, if you get your structures right and you get good people in the business, because when you do address other markets, you've got to make sure that everything that's going on at home in your backyard is under control. You don't want to expand into businesses with this whole, big goal of becoming huge, and then what's going on at home fragments, and all of a sudden you lose your whole business. So you've got to steady the ship and make sure that your customers do a bit of research, and if you're in a generic industry, it's going to work, but just do it in a mature way.
Okay, with regard to the findings again, Mr. Mwara, you mentioned how corruption was a big challenge for several companies. What else stood out? I know insecurity was one of them, but what gives these companies the biggest headache for them to operate their businesses?
I mean, as I said, the top two issues that stood out were, one, the competition they are facing from other players, and two, the challenges that they are facing in infrastructure. But even in the face of those challenges, many of these businesses have grown significantly. People, for example, in the construction industry have grown by over 60% in terms of top line. If you look at services sector, if you look at ICT, there are many of them who have been able to overcome those challenges and still deliver very, very credible results. So really what we are saying is that in here, there's a lot of knowledge. There are people here who can actually help the country to understand, even as we try to address the challenges, creating the foundation that is necessary for rapid growth as envisaged within Vision 2030, in terms of infrastructure, in terms of regulatory framework, in terms of roads, in terms of access to utilities. Even as we do that, there still remain opportunities where people can make money, where people can develop good businesses by dealing with the challenges that they are facing. And competition, the one thing that we have seen from the results is that for you to address competition, you need to have the right people. And many of these people have themselves invested in education. Again, I keep saying this top 100 should not be confused with Juakali. These are serious businesses, and they recognize that investing in the appropriate human resources and going through the professional processes of selecting those people is important, and they are delivering the results to show for it.
Okay, I'd like to dwell more on the point that Mr. Cohen made about doing business in the region and ensuring that your company at home is in good position. What are, Mr. Etemesi, the precautions that companies need to take before venturing out, crossing the borders?
I think the first most important one is you must make sure that you've got two things. One is financial capital, and two, human capital. The biggest danger I see a lot of mid-sized companies facing is when they decide to expand. There's a great business proposition to do business outside your home country. And you have financial resources that are inadequate. And you find that as your business starts to grow in these other markets, you are stretched too thin. And it begins to affect your business at home. And there are many, many instances where companies who have expanded very rapidly, because there's a great business opportunity, have actually burnt their fingers and have had to come back to home to start again. The second one is management capacity, because a lot of mid-sized companies are either family-owned or very closely owned. And so in terms of professional management, it is the owner of the company plus the people around him. When you go into these new markets, the challenges that you face are very different, because you face different regulations, different markets, different sort of challenges. You need a very different type of mindset. So before you go out, make sure that you've got the right kind of management structure that will be able to support your business in those countries. Fortunately for East Africa, there's a certain homogeneity in terms of the way the markets are, but don't underestimate the complexities that they exist between doing business, say, in Kenya and in Tanzania and in Uganda. So I'd say those are the two things, primary things that mid-sized companies need to look out for before they go out and expand.
Now, of course, by viewers watching this, they'll realize that, or will realize that there are a number of people out there that want to start up a small or mid-sized company. What's your advice, Linus Gitahi, to someone who's totally new to the business industry, but is very keen to start up a company? Where do they start?
Well, first of all, can I just comment a little about the last question? Now that, I think the other thing that we must take into account when we are looking to going beyond the country, in addition to the points that has been made by Richard, is to be sensitive to those countries, the soft things about those countries that you are going into. For instance, if you are going to Tanzania and you are having a company where you employ, let's say, 40 people, and you take a busload of 30 Kenyans to go and take all the key positions, and you know, probably only have 10, you are going to have some soft resistance. You'll be going to look for permits, and sometimes you hear that yours was declined, and you start wondering what issues are at play. So I think it is very important that when we go into those markets, we, as much as possible, of course you want to make sure that you've got very qualified people, but you also need to go the extra mile to ensure that you're working with the people on the ground to help you anchor your business. We have found that very, very critical as we have expanded beyond Kenya. Now, to the next question about if you are starting business from scratch. Well, that's a difficult question, but I guess the banker, first of all, I'm sure gets those questions every day about somebody who is starting business from scratch. But I would say, for me, it starts with, first of all, a thorough understanding of the market that you want to be in. Because it's very important that whichever market you want to be in, be a market that you thoroughly understand, and you know the factors that would be at play in delivering in that market. In fact, I remember one of my professors in the university told me that actually we do not have a problem with capital. And I sat for some time, could not believe him, because what he said, what we really lack most times is solid ideas that are going to deliver, solid ideas that are competitive, solid idea that is going to do better than the guy next door. Because when you think about it, like Richard said, banks are there to lend, and that is how they earn the huge profits that we're talking about. But they led to people who can demonstrate that they have a solid idea, that they know exactly how it is going to work, they understand the insights about that market, they understand the competitive landscape, and most importantly, they are daring to go and enter into that field.
Mr. Mara?
Yes, but if you're going to start a business, one, you have to be very clear what you're bringing to the table. Are you coming with that capital? Are you coming with just an idea? Are you coming with understanding of that market? Or are you coming with the capacity to translate that idea, that capital, into profit? That's very, very important. Many people will come forward with woolly ideas, but really when you sit across the table and you test them, and you ask them the question, how are you going to make money? You are saying you're going to employ 20 people, or you're going to buy 5 matatus, and their job is going to be running from Harambee Avenue to University Way. Have you looked at the traffic jam? What you know nothing. What do you know about this business? So somebody needs to make sure that you are coming in with some level of competency in that sector, in that industry. And if you don't have the competency yourself, you can demonstrate how you can bring it in and still make money. Because at the end of the day, the objective is to make money. Now, the question you have to ask yourself is, how long do you need to make that money? How long are you prepared to invest before you can actually start turning your investment into profit? Is it going to be 1 year? Are you going to look at 3 years? Are you going to look at 5 years as a payback period?
Yeah. And I also wanted to add that actually the answers also lie in this room, because these are all people who started businesses 5 years, 10 years, 15 years. And if we start, if the cameras face that side, you'd hear huge stories about how to do it, what to do, what not to do. One of the things we want to do within Business Daily is to be able to tell those stories. So as we move along, we'll be coming to you to share those stories with other Kenyans who want to dare like you did, and probably help them in their journey as they seek to be what you are. And as you graduate to Club 101.
Mr. Cohen, your contribution, because you can speak perhaps on behalf of some of the audience.
Yeah, I mean, I love the fact that you brought up that point, at least your professor said it, because I've often thought, well, what's the idea? Yeah, sometimes we sat there paralyzed in, well, what idea are we going to have? Because sometimes I think the capital and all that kind of stuff will come. But I just want to relax everybody to one other issue. I've seen businesses in South Africa really succeed in taking the same idea, but just doing it in a much better way. In these business awards that we just did in South Africa with one of the media companies there as well, a wedding planner won the award in Cape Town because they just did things completely different. They went to the UK market to get people to come and get married in Cape Town on these beautiful kind of golf estates, and they just did it in the most unbelievable way, and they've turned out to be a huge success. Now, if you sat there in the beginning, you would say, oh, but there are lots of people planning weddings, I'm not going to do that. But sometimes use your imagination to go wild and say, could I do it in the most amazing way? And none of us here have spoken about passion. You need the right idea, and you spoke about the woolly ideas, but I think you also got to be passionate about it. And most of the businesses that we judged back in South Africa, there was a passion for that business. And then the rest of the stuff, the finance, it's must-do stuff. But without that passion and that like kind of you want to really succeed, you're not going to get anywhere in the first place.
Okay. Next question now. We're talking a lot about how individuals need to know what's right, what the right thing to do is. But where can they get this information? What role do perhaps universities play in a situation like this, or should they play?
Okay, as far as universities are concerned, I think the job is quite cut out, and the point for us, I think, is to be able to get people to understand that universities can and should play a very significant role in terms of not only generating the information, but also passing on the information, disseminating the information. I can tell you an example. Right now, funding for research in management, for example, is a problem. Primarily because most funders think the only areas to fund is science research. Okay? The other area you could look at is the actual culture of our enterprises not engaging in funding research. So I say to you, the biggest problem we have is the engagement problem. For long, the attitude that was out there was universities were these, ivory towers where these professors went, and so on and so forth. And the image of an old, tatty professor still pervades if you speak to a lot of people. So the point of, in terms of the role of the universities, is it's a question of engagement, number one. Number two, playing a leadership role in terms of generating the necessary information, generating the necessary data that is required to drive industry. But that too can be done only if they support in that area. Support is obviously growing. That is the good news. But still, we have areas that need a lot of support. Beyond that, we also believe that in terms of actual application of that information and knowledge, and beyond training, somebody asked about an earlier question about engaging professional services. And I think universities can do a lot to support SMEs in terms of developing skills, competencies, and so on and so forth in a lot of the things that they're doing, provided that engagement continues.
Okay. All right. We're about to wind up, so I'd like to ask you all for your final contributions to this discussion. I'll start with Mr. Etemesi, the CEO of Standard Chartered Bank. Where would you like to see the Kenya's top 100 mid-sized companies survey in the next 5 years?
Actually, I'd sort of turn that question around and say that I'd like whichever companies are on Kenya's top 100 to be the top 100 companies in Kenya. It's time we got our own homegrown multinationals, which is something that we all aspire to. At the moment, our multinationals come from outside. We have very few Kenyan multinationals. If this survey is able to produce the first 10 or 20 or 100 Kenyan multinationals within the 5 years or even sooner, I'll be very, very happy.
Okay. Mr. Mwangi?
Well, I should say that I am very pleased with the findings of the survey. Clearly, entrepreneurship is alive and well in Kenya. We have companies that are innovating, that are growing, that are hiring new people every day, that are trading in the region. And the future, I think, is very bright. Looking ahead, I think everything is in place for these companies to drive the takeoff of this economy into a newly industrialized country by 2020.
Okay, Linus Gitahi.
Yeah, Smriti, I know there was also a question about when we ran the supplement about this initiative, which is going to be happening in 2 weeks. And there was a question about can we work even more closely in ensuring that we make it as representative as possible amongst yourselves. So I want to give that commitment that our team will be coming to you so that you can tell your stories, not just for now, but you'll notice that we've dedicated quite a bit of space in reviewing Top 100 regularly within Business Daily. And also when our other team comes to talk about advertising, maybe we should even move away from saying, I want to put an ad. Let us now be sitting together to say, I want to move my business from here to here. What kind of solution are you able to provide? Because within Nation Media Group, we've got numerous platforms across East Africa which can offer you a solution for the needs that you have in terms of meeting your audience. Finally, I just want to thank you. It's been a great time having yourselves. And like Richard, I hope Top 100 will become the Top 100. Thank you.
Right. As far as I'm concerned, I am really excited about Top 100 and this initiative and the knowledge that it is generating. But the other thing I can see is that East Africa, to me, is one of the most exciting places to be in business in the world today. And I want to encourage Top 100. When you look at what's happening in Eastern Africa in terms of the investments in roads, the investments in the proposed port in Lamu, when you look at the connection with Southern Sudan in terms of road and rail, when you look at power generation, when you look at the endowment in natural resources that we are having, and then you also look at the level of interest that we are attracting from the rest of the world, that this region is attractive. And many of you I know are already operating at an East African level. Many of you I know are already looking at Southern Sudan. I know many of our horticultural companies already went into Ethiopia. My own vision is that in years to come, we are going to have East African businesses being celebrated on a global scale. That you are not just being celebrated here in Kenya as Top 100, or in Uganda as Top 100, or in Tanzania, Top 100, but we will stand up there and say in Fortune 100, there is a Kenyan company that emerged from this process that is leading in a particular sector in the world. And I have every confidence that can be achieved from this group.
Okay. Mr. Cohen, your final comment?
I just hope that this group understands that your responsibilities go much further than putting money in your bank account. I think that you all have a massive opportunity to make a difference in Africa, which we know has its own issues that are unique. And as a collective group, I just think that you could do amazing things. And something that I found out about myself about 12 years ago is when you give, it actually makes you feel better about yourself. And it changes the way you behave to other people. Don't do it in a magical thinking way that if I give, I'm going to get back much more than I gave, all that rubbish. But if you give as an individual and as a business and you make a difference to the people around you, I think that you're going to feel amazing yourself. It's going to change the way you think about yourself, the way you are to other people, and we really need you to make a collective difference in Africa.
Okay.
Yes, I think my parting shot is very simple. We're in a good place, but let's not be complacent. We need to continue innovating. Your good ideas and your good businesses have got shelf lives. So think, keep thinking, and keep bringing new ideas to the table.
Okay, gentlemen, thank you very much to all of you for your contribution during this discussion. Well, you have been watching NTV's live coverage of the Top 100 Mid-Sized Companies Survey panel discussion. With me this afternoon has been Mr. Richard Etemesi, the CEO of the Standard Chartered Bank. Also beside him, Mr. Peter Mwangi, the CEO of the Nairobi Stock Exchange. Next to him, Mr. Linus Gitahi, the CEO of the Nation Media Group. Beside him is Mr. Josephat Mwaura, the CEO of KPMG. Also with us has been Mr. Stephen Cohen, the CEO of Sage Pastel, and Dr. Katwalo Mulengani, the Director of the Institute for Strategy and Competitiveness from the Strathmore Business School. It's been a pleasure and thanks very much for watching. I'm Smriti Vidyarthi. Good afternoon.